There's one strategy for Forex trading that I remember that I found online a while ago. And in this specific video, I want to review it with you because I am 100% sure that this is the easiest Forex strategy that you will ever find. So if you're a complete beginner in Forex trading and you don't know what strategy you go with, or you just basically starting and even you have a demo account, but you don't know where to place trades, this strategy is going to be the one that's going to help you make money. So let's go ahead and jump right into it. All right, so the first thing that we have to understand or have to do with this specific strategy is you have to identify a trend. Now, an easy way to actually do that is to add a 200 simple moving average. This 200 simple moving average will basically tell you where the current trend is actually going. And if you want the extra help, you can add a second moving average that is going to be a 20 period. Now, what that's going to do is basically is going to tell you where the price of the asset is actually going. So for instance, myself, I can see right here that the price is a downtrend, not only because of the price is going down, but because whenever the 200 EMA is above the candlesticks, it basically means it's a downtrend. When the price is actually below the candlesticks, like it is right here, in this area, this is an uptrend. That means that the price is going to continue going down, going up. Okay, so once you identify the trend, you don't actually need these lines in case you don't want to, but I'm just gonna leave the 20 EMA as a quick reference to keep identifying the trend. Now, is this strategy to go against the trend or with the trend? Now, there is a strategy with a change in trending, but this one right here is going to be to go with the trend. I don't want you guys to get too complicated into it. So more importantly, just go with the trend. It's easier. There's a saying that goes, trend is your friend. And in this strategy, yes, it is. So we're not going to go against the trend. We're going to go with the trend. Now, let's go ahead and identify some entry points. And in order to do that, let me just go ahead and get a pair that doesn't have all the lines written. All right, there you go. So the first thing that you got to do is actually identify what is the trend and what will be a high point to take as a reference. This is going to be my reference point right here on top. So this is like the highest point, right? It was an uptrend right here, but then it changed the trend. So what's the highest point? This one right here. Then we're going to identify what would be the lowest, the highest low or the lowest high, which is this one right here. Why is it that I identified it? Because of this right here. So you see that the price really dropped really hard, but then it actually jumped back up and this became a new resistance line and the price continued to drop, right? So that is a new highest low. Now this right here turned again into a support level right here. Now, is this a new real strong support line? I don't think it is. So what we're going to do is that we're going to identify a brand new support line, which I would say is this one right here. Now you see that the price touched this level, dropped, and now it continued. This is the lowest level. Then it continued to bounce around right here. Then it jumped right here, but then it broke it. It broke this exact same level, which I would even say that it's slightly lower right here. This due to this wick that you see right here. You see he touched it. Now we need to identify a new lowest high, which is this one right here. Why? You see that drop was really strong and it combined right here. It touched this level, it bounced right back up, and then it turned into this. It broke the resistance again, and this is the new lowest high. Now, it's super important that you actually understand these points because this is where you're going to enter on the strategy is you're going to go with the trend. Now, Chris, where do I enter? Do I enter in this level when the resistance is broken? No. You're going to realize that the price is actually going to be broken. It's going to be broken. For instance, it broke it right here. But then it got to this level, it jumped, and this would have been the perfect entry level for a sell position, right? Now, it touched again this level, then it kept on bouncing around right there. Then he broke it again. Well, I would say it broke it right here. So if it broke it, it went to this level again, and our entry point is going to be the latest resistance point, which is this one right here. This would have been a good entry level, okay? Now it dropped it again, it broke it, and guess what is going to be a new entry point? is going to be this one right here. Okay, so if you actually are wondering, hey, where should I enter? I would say the entry point is going to be this one right here. Okay, because once the price again touches this level, it's likely that it's going to start dropping. If it drops, then you're going to realize that we have a huge potential to make a 5-to-1 reward ratio, which basically means that you're going to make 5 times whatever you risk as your money. Okay, now this is one example. We're going to identify a new pair in order to have more options. And in order to do that, I'm just going to delay this up until this level. All right, the replay button. All right, so what we're going to do is that we are going to identify the highest point, which was this one right here. Right now, there's going to be a new support line that is going to be built. We need to find that support line. Seems like it's going to be this one right here. You see this one right here. It was respected here, here, and here. So we have a new support line right there. Do we enter? No, we don't enter. Why? Up until it touches this area. If it doesn't, then we don't enter. Now, you realize that it broke that support line already. It's kind of bouncing right there, and now it dropped more. So what we're going to do is that we're going to identify a brand new support level that I would basically say is right there bouncing around. Could be this one right here. The new entry point would be right here, right? If it touches back up, right? Right now it's kind of arranging in there, is not really moving. You can say this is a new support level. I would even say that would be a good support level. I don't know how I missed it, but it's around right there. So that would have been a good entry point. Why? Because if you notice, it has respected right here the resistance as well. So if you actually enter that position, you should enter with at least a 3-to-1 risk reward ratio. Okay, I'm gonna put the stop loss above the highest wick, and I'm actually going to even identify what would be the best stop loss for this right here. You can see that there was a resistance and support line in this area, so I would say the highest wick, that would be the best stop loss. And the take profit, I'm going to put it at the end of the exact same ranging, at the same support level, right? So we're going to see where that one actually goes. And there you go. Boom. It hit the take profit, giving me an 8.6 reward ratio, which is good. This was very risky. All right. You can easily give it twice of it. There you go. So you don't actually risk that much, but still you gave a 5-to-1 risk reward ratio. Now, what will be a next entry point? It could be whenever the price touches back up, or we're going to identify the price continues to drop, then we're going to have a new setup. If the price goes and touches again, that's when we're going to enter, or we'll simply wait for this support line to be broken one more time, and then we're going to have a new resistance level. It actually touched right now. It actually touched. So you can even have the exact same setup for a new trade. Would say around here. There you go. And we're going to see if it respects it. Okay, it touched the stop loss. And now you can see that it actually broke this resistance level. So if you broke the resistance level, what does that tell you? That tells you that this is now a support line. This is not a resistance anymore. So if it's a support line, you can enter a call position or a buy position to this area only if you see a second confirmation. That second confirmation would have been here, respecting again and jumping back up. Since it didn't happen, we're not gonna wouldn't enter that one. So we're still waiting for a new touch, which actually happened right here. And I apologize that I didn't put the setup right here. Well, it actually didn't touch. So no, we wouldn't have been able to enter. All right, so we continue watching. Now we broke this level. So we're actually going to look for, oh, I'm sorry, I drew this one. So we're actually going to look for a brand new resistance level, support level, I'm sorry, which would have been right here. Actually, it's not the one. I think it would have been right here where the price started to do all the wicks. Now, since that actually started, this is a new resistance level. So this is where you're going to enter the position if possible, if it touches back up. So if it touches back up, what you're going to do is that you're going to enter a position, at least 3-to-1 risk reward. So it would be around here pretty much. We're going to continue watching and see if it touches. There you go. It touched. This is news. Yeah, this is news. We're not going to get into it. These are news, all right? So with news, you shouldn't actually be trading. But now, since this level was actually broken, we created a brand new support line right here. You see, it broke it, it rebroke it, and now we tested it again. This will be the new lowest. So this would have been a good entry position. There we go. We're gonna do 2-to-1. We're gonna do in this one, and we see what's going on. These news actually were kind of crazy, and there you go. The take profit was actually hit. All right here. So again, what is it that you do in order to get the entry points? It's super important that you understand that you go with the trend, but you don't actually just go whenever the support line gets broken. Yes, that's a way of entering the position, but for this strategy, I do recommend you to wait for the spike if it's a downtrend and then enter again. These are your entry levels. These are your entry levels. Now, what happens if the price actually starts going on the opposite direction and it breaks all these resistance levels? So if the price actually starts going on the opposite direction and it breaks this level right here going up, that would have been a good opportunity for a buy position. If it breaks it, respects it, and then boom, it's gonna spike. So basically what the pair should do, if you wanted it to be an uptrend, would be breaking it like this, testing the support line again, and then it's actually gonna do this. Okay, so it's super important that you understand the entry points that are not going with the trend, just blindly and entering positions. No, you need to wait for the setup. Okay, hopefully it's not that complicated. If it is, make sure that you actually go ahead and rewatch this video as many times as needed. Now, risk reward ratio is something that we need to actually talk about right here. Now, you're gonna identify your entry points. For instance, this one, I put it as a 5-to-1 risk reward ratio, which is this little thing right here, risk reward ratio. The risk reward ratio is actually going to depend really on basically the levels that you have. You can't really put the stop loss all the way to this level because that basically means that the price will be broken. So I would say at least go to 2.5 risk reward ratio should be good. 2.5 would be around right there. You're still safe and you make good money. And this strategy is at least 75 to like 80% accurate. So if you actually do it right in 10 positions, you're gonna be making around 8 positions that are good, that give you twice what you invested. So you invested $100, you will be making $200 per position, minus the spread. But you're gonna be making what? Around $1,800, $6,000, $1,600, and you're gonna be losing around $200. So around $1,400 in profit is actually good. So go with a risk reward ratio at least 2.5. You can do more than that if you're risky enough, but 2.5, I think you can be good to go. And the last thing is, how many trades should you place per day? I'm looking at the 1 hour chart, but honestly, if you actually go into 15-minute positions, you can actually have a lot of options as well. I think with 1 hour charts, you shouldn't do more than 1 or 2 per pair. But if you're gonna go with 15 minutes, you can easily place 3-4 positions per trade. For instance, right here we got 1, then we got 2. Here we don't have any, and I'm getting ready for this one. And this happened within 2 days. So yeah, around 1 or 2 positions per pair should be enough. Now, what I do recommend you is, if you're actually gonna be using this strategy, prepare your setups for the week like I actually did myself. So I'm actually ready for this week with USD JPY. You see, right now the price needs to drop a little bit, and then I'm gonna enter a buy position. Euro USD, GBP USD, AUD USD, and GBP JPY. All of these pairs, I actually have them ready. So if any of them actually give me the good entry point, I'm going to enter, but don't overtrade. Don't chase them. If it doesn't happen, it doesn't happen. But if it happens, trust me, you have a good chance to make money. Hey, so hopefully you enjoyed this video. And if you did, smash the like button, support this YouTube channel. But more importantly, if you have any questions or comments to share, you can always use the comment section below, and my team will be happy to reply to you. Thank you very much for watching this video, and I'll see you on the next one.